Hey guys, I just wanted to do a quick video responding to the previous video that I dropped in terms of top-down analysis, and then of course an amplification for the liquidity pools that I also discussed as well to kind of prove concept, basically reinforce what was shared. So yeah, let's get into it. So as you can see, price rallied up, right? And the assumed bias was that price was going to potentially drop lower to go higher, right? We could switch through some of the indices and we can see how price in fact did that, right? Price ended up trying to dig lower, right? And then basically that aimed for specific liquidity pools, which we are going to discuss. So again, the list of liquidity pools that I've shared has to do with previous month's highs, previous month's lows, previous week's highs, previous week's lows, previous day's highs, previous day's lows, new week opening gaps, new day opening gaps, London's highs, London's lows, previous AM session highs and lows, as well as the previous 3 days highs and lows. Okay, so with that understood, right? Expecting price to go lower on this weekly chart, assuming that that is the bias, which it was, when we drop down, as we're navigating on those lower time frames, with that in mind, what liquidity pools can we utilize and how can we apply them to get consistent targeting assumptions? So in terms of what was happening here, you could see because we assumed the price was going to go lower on that higher time frame monthly, weekly chart, right? Price basically utilized previous day's lows, right? Previous day's lows, right? Let's go to the NASDAQ, right? Previous day's lows, right? Price rallied up, took out a previous day's high from Sunday, right? It came back to an inversion fair value gap, all right? And then price ended up dropping. So if you look at this as well, you can see that this is a power of three dynamic as well to go lower. And if you haven't watched my Power of 3 series, definitely do that. I'll leave a card right here for you guys to check that out either now or after the video. But yeah, you could see how price rallied up to start the week and then ended up dropping lower on its way to our higher time frame target, which was going to be the monthly, weekly, or in this case also the daily fair value gap, right? So price dug lower on its way there. It attacked previous day's lows, previous day's lows, previous day's lows, even to previous week's lows, right? So you can instantly start to see that those levels are important and they're just significant and they're always going to be there. The list of liquidity pools that I've mentioned, they will always be there. So what that means is you always have something that you can reasonably anticipate will get targeted. Okay, so no more guesswork, right? It is kind of an assumption for which one is going to hit, but you have to have situational awareness, and this is a way to assist you in that situational awareness. Because again, I said that the weekly chart would likely want to dig lower if it was going to go higher. And what happened? Price ended up digging lower to potentially go higher. All right, and one thing also you want to pay attention to is this daily and weekly DXY price action. So price dug into the sell side and then rallied up, and then it attacked from, if you go from this high to that low, you can see how that's a premium fair value gap. And if you've watched ICT's 2022 video or 2022 series, aka Model 13, you can see how the first fair value gap in this range was, slid through. It did offer a potential, little drop here, right? And if you translate that to right side of the chart, which is the S&P, that drop there created the manipulation of the weekly range. So it presented a bullish candle off this retracement when it hit this fair value gap. Inside that, you could have found a move to potentially buy if you were trusting a bullish bias. And then of course there was a targeting factor here as well, using what we're discussing in terms of the liquidity pools. This previous day's high, it also attacked the wick, right? But eventually, like I said, it was most likely going to want to dig lower. But this is the importance of the higher time frame analysis, because if you saw this, maybe you thought it was just going to be bullish, 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 and then when price turned around on you, you're probably questioning why. Well, it's dropping because it hasn't fulfilled its higher time frame levels. Okay, but again, as you can see, prices dug in and took out previous day's lows, and then of course previous week's lows. When it comes to the NQ, it was a lot more excited to the downside, and then of course the Dow is just the Dow, right? A bunch of nonsense. But yeah, as price was reaching down to that higher time frame level, again, these liquidity pools on the list are always there, right? And depending on what's happening in the chart at that current moment, will determine which one of these has a higher probability to be attacked. But there's no more guesswork as far as what's the important highs and lows. You basically have a list of them. So with that being said, this is a bearish power of 3, assuming it was going to be bearish from that higher time frame like we discussed in the last video. It's reasonable to anticipate or try to frame out a potential power of 3 situation, which you could see has occurred here as well, right? And if we go to the weekly chart, we can look and see this weekly candle, right? We can look and see how that looks. Price opened, rallied up, and then declined, attacking previous week's lows. So previous day's highs, previous day's lows, previous week's highs, previous week's lows, previous month's highs and lows, and then of course London's highs and lows, which we're going to discuss, all play a significant role. Okay, so let's actually go to now the 15-minute chart and start looking at the importance of the London's high and London's low. Okay, so we can see how this is a previous day's low here. All right, let's actually label out all the previous day's lows and just observe. So all these things that we're going to be doing right now are things that you need to go into your own charts and actually apply and get a bunch of sample sets, of data, so you can start to really trust these concepts. So it's a previous day's low here, another previous day's low. This is a London's high, and we got London's low. All right, London's high, London's low. And we're gonna basically copy that all throughout this price delivery here. Okay, so I've labeled all the London's highs and London's lows. And then of course the previous day's lows. And then we can see the previous week's lows. Okay, so the whole point of what we're basically going to be doing right now is pretty much observing how the list of liquidity pools assists you in navigating price, right? And then the importance of the analysis that has been discussed from the previous video, and then of course what we're talking about right here and right now. Okay, and then basically again what I'm doing here, you should be going into your charts and you should be studying these things. All right, doesn't mean you have to do this every single time you're on the chart, but it's a good idea to be aware of these specific levels and this dynamic in delivery that we're basically going to be amplifying. Okay, so from this day you could see how London's high was created, and then this created a bullish power 3, kind of indecisive, I guess. It's like went up, went down, and then came right back to the open, right? So it's kind of a general Monday, right? Just manipulation, consolidation. But nonetheless, price created a London's high, dropped down, attacking the London's low, and then price rallied up. So it took London's low to then attack London's high. Price ended up piercing that. And so this is a previous day's low, and I believe this here would be the previous day's high for this price action. Okay, so London's highs here was created, right? Got above the 9 p.m. Pacific Standard Time, 12 Eastern Time, and then price declined, right? Attacking the London's low, and then price ended up coming back and attacking the London's high. This is a previous day's high here, didn't have a chance to get above it, but as price navigates the London's highs and London's lows, the whole point is you want to observe how price utilizes these levels more near term as you are trying to see price deliver to these higher time frame, previous day's highs, highs and lows, previous week's highs and lows, previous month's highs and lows. Okay, so we can see how this was also a London's high here. Price left that equal highs, basically primed up liquidity for this raid here. Price attacked this London's low, right? Dug really deep into it. There's order block there as well. And then price came off that low and then came up the next day, taking London's high, pierced the high, and then price dropped lower, attacking the London's low. All in the context of price wanting to go higher to go lower based on the weekly perspective that we had, assuming that if price was to go higher or continue to go higher because of the volume of price going so bullish for so many days, it was reasonable to anticipate that price could see a possible retracement. Okay, but as price is attacking these previous day's lows on its way to those weekly levels that we outlined, that you will outline, it's going to attack other liquidity pools. And as a day trader on the way to these higher time frame levels, we want to be able to navigate those other levels. So we can see how price pretty much attacked the London's low here on its way to this previous day's low. Then price creates another low here, previous PM session low, and then previous AM session's high. Okay, so price ended up creating the equal lows here. Price rallied up, attacking the previous AM and PM session highs, creating a bearish power of 3 inside a fair value gap as well after a shift in market structure. Inside, of course, the context of we're looking for price to go lower to possibly go higher. So price got above that, sold off, attacking the London's low, leaving the high there on its way to attack the previous day's low. Then it ends up attacking the other previous day's low from Tuesday. Okay, so the whole point of this is to show you the significance and helpfulness of this list of liquidity pools that you should be observing every single day. And then on its way to those previous day's high, previous day's lows, previous week's highs and lows, previous month's highs and lows, it's going to be using the London's highs and lows a lot of times for manipulation and near-term engineered liquidity. And it's also going to be significant to observe the previous AM session highs and lows and PM session highs and lows, as well, as you can see here, right? AM session's high from the previous day was taken, and then the previous day's low, which is also in alignment with the previous AM session's low, previous PM session's low, was also attacked. So on its way to these higher time frame levels, understanding these specific areas and price as price is delivering, as well as understanding those power 3 dynamics, you're able to really observe and navigate price delivery. All, of course, in the context of your top-down analysis as well, and just understanding what levels are significant. So these levels are significant, right? So basically, again, this whole video was just a proof concept, basically show the before and after of my assumption that price was going to go lower, and then kind of breaking down the liquidity, these specific liquidity levels, and showing you how they're utilized and how you can start going in and studying, which is pretty much this process here. You can go study, label out all the previous days highs and lows, previous week's highs and lows, previous month's highs and lows, find those higher time frame PD arrays, and then observe how price utilizes them. Okay, so let's just for those that don't know what that blue box is, the blue box is this fair value gap here. Okay, it's this fair value gap right here from this high to that low. Okay, and then let's transpose that down. Okay, so this is the higher time frame daily fair value gap. Okay, and you can see how that was utilized. All right, so I hope this was helpful on top of the other video, just to show you guys the application of how you can go in and apply these liquidity levels and start to study. Of course, things aren't be-all end-alls, but again, one of the most important things you're going to want to try to learn as a trader is how to navigate price delivery. Okay, how do you navigate? What's important? On its way to these higher time frame levels, how can you participate moving forward without having to only be involved in that higher time frame or try to be in that higher time frame move? How can you navigate things on the way to it so you don't have to wait and only have like one setup per month or one setup per week, which is not a problem, but some people are day traders and they like to take a couple more trades, right? And how do you do that with high probability? How do you get consistent in your targeting Well, this is one of those ways, one of those perspectives that helps you get yourself in alignment with that type of consistency in targeting and price navigation. Okay, so if you got value from this video, you're definitely going to want to go check out the Power 3 video I've done, which I'll leave a card for. So if you guys have questions, leave them in the comments. Otherwise, I will see y'all on the next one.